Let's address the myth of making 5% a day trading US indices like the S&P 500 or NASDAQ. While it's technically possible, the reality is that this goal is extremely aggressive and high risk. If you compounded 5% daily, you'd be a billionaire in months. Clearly, it's not that simple. Professional traders focus on consistency and capital preservation, not daily home runs. Chasing such high returns means exposing yourself to strategies with a huge risk of catastrophic losses. Most who try end up losing everything, often in a single bad trade. In this video, I'll break down the advanced high-octane strategies some traders use to chase these returns. But with a massive warning, this is not for beginners or anyone who can't afford to lose. Let's dive into the reality behind the 5% daily dream. First up, scalping. This is the trading world's equivalent of a high-speed chess match, where every second counts and hesitation can cost you dearly. Scalping is all about making dozens, even hundreds of tiny trades each day, aiming for small profits that add up over time. The idea is simple. Get in, get out, and repeat, again and again. Scalpers jump in and out of trades within seconds, glued to the screen, watching every tick. There's no room for distraction. Every moment is a potential opportunity or a looming threat. The hope? Enough small wins to hit that elusive 5% daily target. It sounds achievable, but the reality is far more complicated. But the reality is brutal. You need advanced tools, lightning-fast execution, and you'll pay commissions on every single trade. The technology arms race is real, and milliseconds can make or break your day. Even $1 per trade adds up fast. 100 trades means $100 in fees before you see profit. And that's not even counting the hidden costs, like platform fees or data subscriptions. Slippage is a constant threat. A tiny price move can turn a winner into a loser instantly. The market rarely gives you the exact price you want, and every cent lost to slippage chips away at your bottom line. The mental toll is huge: burnout, stress, and the temptation to revenge trade after losses. The pressure to stay sharp for hours on end is relentless, and mistakes are inevitable. You need deep knowledge of market microstructure and years of practice to even stand a chance. Understanding order flow, liquidity, and how big players move the market is essential. Most scalpers end up bleeding their accounts dry from commissions, slippage, and small losses. The slow drain is often invisible until it's too late. The pressure to be perfect is immense. One big loss can erase dozens of wins. All it takes is a single mistake or a sudden market move to wipe out hours of hard work. Scalping is a high-wire act with no safety net. There's no room for error, and the consequences of a misstep are immediate and unforgiving. For most, the risk of death by 1,000 cuts is far greater than the chance of hitting that 5% goal. The constant grind wears down even the most determined traders. It's a strategy best left to machines or the most disciplined, experienced traders. Algorithms can execute with speed and precision that humans simply can't match. The odds are stacked against you, and the psychological strain is relentless. Every trade is a test of your nerve and your discipline. Even seasoned pros struggle to maintain the focus and discipline required. The margin for error is so slim that even a brief lapse can be costly. If you're not prepared for the grind and the risk, scalping will eat you alive. It's a marathon of sprints, and most simply can't keep up. Consistency is rare, and the margin for error is razor thin. One slip, and your hard-earned gains can vanish in an instant. Most traders are better off avoiding this approach entirely. The risks and demands simply outweigh the potential rewards for the vast majority. The dream of daily 5% gains through scalping is just that, a dream. For most, it remains out of reach, no matter how hard they try. Let's move on to the next high-risk strategy and see if it offers a better path, or just another set of challenges. Next, let's talk about momentum breakouts, one of the most exciting and high-stakes strategies in active trading. The goal here is to catch explosive moves when price breaks through key levels, often resulting in rapid gains within minutes or hours. Momentum traders start by identifying support and resistance, those crucial price zones where buyers and sellers have battled before. They wait for price to surge through these levels with a burst of volume, then jump in, aiming to ride the wave. The objective is to capitalize on a strong, swift move for a quick profit, sometimes hitting that 5% target in a single trade. Pre-market analysis is crucial. Momentum traders scan for stocks with news catalysts, high relative volume, or technical setups that suggest a breakout is imminent. You're looking for levels that have been tested multiple times, building up pressure, ready to explode. Volume is your confirmation. No volume, no real breakout. Without strong volume, breakouts are more likely to fail and reverse. Place your stop just below the breakout. This protects you if the move fizzles out. If the breakout fails, get out fast. Don't hesitate or hope for a reversal. The upside? Huge returns if you catch the right move, especially when using leverage to amplify gains. The downside? False breakouts are everywhere. Algorithms and high-frequency traders love to trap breakout traders and trigger stop losses. You can get stopped out multiple times in a row, even on setups that look perfect. This can quickly erode both your capital and your confidence. Market context matters. Breakouts work best in trending markets, not in choppy sideways conditions where fakeouts are common. Risk management is everything. Wide stops on leverage can be devastating, leading to outsized losses that are hard to recover from. Even the best setups will fail sometimes. No strategy is perfect. Accepting small, manageable losses is key to long-term survival in momentum trading. Chasing daily profit targets leads to desperation trades and blown accounts. Discipline is non-negotiable. Remember, momentum trading is about playing the probabilities, not chasing guarantees or certainties. You need discipline, patience, and the ability to walk away after a loss, reviewing your trades and learning from mistakes. Most traders overtrade and get chopped up by whipsaws, losing more than they gain. The allure of big wins is strong, but the risk of repeated losses is just as real. Never forget the downside. Only a few traders can consistently profit from breakouts, and it takes years of practice and emotional control. For most, chasing that 5% daily goal is a fast track to ruin. Focus on process, not just profits. Now for the wildest ride, 0 days to expiration, 0 DTE options on SPY or QQQ. These are not for the faint of heart. These contracts expire the same day, making them ultra-sensitive to price moves. The volatility can be both thrilling and terrifying. A tiny move in the underlying can double or triple your option's value, or wipe it out completely. The stakes are incredibly high. This is where you see stories of turning a few $100s into thousands in minutes. The allure of quick riches is strong. The catch? If you're wrong, your options can go to 0 in hours. Your money vanishes. The risk is ever present. You must be right on both direction and timing, or theta decay will eat your position alive. Time is not on your side. Most 0 DTE options expire worthless. The risk of a total loss is sky high. It's a brutal game. Strict risk control is non-negotiable. Never risk more than a tiny fraction of your account. Discipline is key. Some pros sell 0 DTE options to collect premium, but this carries the risk of unlimited losses if the market moves sharply. It's a high-wire act. One bad trade can wipe out months of gains, or your entire account. The margin for error is razor-thin. 0 DTE trading requires mastery of options Greeks, nerves of steel, and impeccable timing. It's not for everyone. For most, it's financial Russian roulette. The odds are rarely in your favor. The potential for fast gains is real, but so is the probability of ruin. It's a double-edged sword. Emotional discipline is everything. Panic or greed will destroy you. Staying calm is crucial. Most traders are better off staying far away from 0 DTE options. The risks often outweigh the rewards. The market is ruthless, and the learning curve is steep. It's a tough environment to navigate. Even experienced traders can get burned in this arena. No one is immune to the risks. The dream of easy riches is a dangerous illusion. It's a mirage that can lead to financial ruin. If you value your capital, approach 0 DTE options with extreme caution. It's a high-stakes game. Let's look at another high-leverage playground futures. The risks and rewards are equally compelling. The futures market is where leverage gets real. Trade the S&P 500 or NASDAQ with a fraction of the capital. One E-mini contract controls over $250,000 in value with as little as $1,000 margin. A small move can mean huge profits or devastating losses. Micro E-minis let smaller accounts play, but the risks are the same. Trend following is common, but tight stop losses are essential. Leverage cuts both ways. A 10-point move can make or break your day. If the market moves against you, you can lose more than your account, ending up owing your broker. Futures trading is dominated by pros and algorithms. You're up against the best. Discipline and risk management are non-negotiable. One mistake can wipe you out in seconds. The speed and stakes are unforgiving. Without a rock-solid plan and nerves of steel, futures will chew you up. For most, the risk far outweighs the reward. Finally, let's talk news-based trading, profiting from wild volatility during major economic releases. Events like CPI or Fed decisions can move markets in seconds. Traders react to the initial move, not the news itself, using ultra-short time frames. Some use options straddles, betting on a big move either way. Others fade the first spike, expecting a reversal. The potential for fast profits is huge. Catch the right move and you can hit your target in minutes. But the risks are extreme. Spreads widen, slippage is brutal, and stop losses often fail. The market can gap through your stop, turning a small planned loss into a disaster. Whipsaws are common. Markets spike, crash, and reverse in seconds. You need deep macro knowledge and instant execution. The market's reaction depends on expectations, not just the headline number. Most traders get chopped up by the chaos. Only the most skilled, well-equipped traders survive this environment. For everyone else, it's safer to watch from the sidelines. The adrenaline rush is real, but so is the risk of ruin. News trading is not for the faint of heart. The odds of consistent success are slim. Let's wrap up with what actually works for most traders. We've covered the most aggressive, high-risk strategies out there. Chasing 5% daily returns is a recipe for stress and likely failure. Real trading success is about risk management, capital preservation, and steady growth. Accept losing days and focus on surviving to trade another day. The best traders take small losses, avoid revenge trading, and protect their capital above all. If you're serious about learning, comment below with your experience and goals. I'll reply with tailored resources. Build a solid foundation. Don't chase impossible dreams. Thanks for watching, smash the like button, and I'll see you next time.